So you hear about a major insurer shutting down a key part of its business. And your first thought is probably, uh-oh, that doesn't sound good. But what if I told you it's not about failure at all? What if it's actually part of a massive strategic leap forward? Let's get into it.
Right? That's the big question hanging in the air. A company the size of Radian doesn't just decide to close up shop on a major business unit for no reason. So what is really going on behind the scenes?
Well, here's the thing. This isn't a retreat, not by a long shot. It's a very calculated move, just one piece of a much, much bigger puzzle. And to really get what that puzzle looks like, you first have to understand the piece they're taking off the board.
Okay, so let's dive into the business at the heart of all this, the mortgage conduit. Now, I know that sounds like some complicated financial jargon, but don't worry, we're going to break down exactly what it is and what it does, nice and simple.
In a nutshell, a mortgage conduit acts as a kind of middleman in the whole housing market. Radian's division, which operated through Radian Mortgage Capital, wasn't the one lending you money to buy a house. Nope. Its job was to go out and buy up all those existing home loans from the banks and lenders who did.
It's really a three-step dance. Step 1, Radian buys up a bunch of mortgages. Step 2, it bundles them all together into a neat financial package, which is called a security. And then Step 3, it turns around and sells that whole package to big investors on what's called the secondary market. Now, this is a super important part of how the housing market works, but for the future Radian wants to build, it's just become a distraction.
And that right there brings us to the real core of this story, the big why. See, this shutdown isn't happening in a vacuum. It's the direct result of a huge, fundamental shift in what Radian wants to be as a company. And the spark that lit this entire fire, it can pretty much be traced back to this one number, $1.7 billion. That was the all-cash price tag on an acquisition that was about to change absolutely everything for Radian. So what they buy with all that cash? A company called Inigo Limited, which they bought from Lloyd's. And this wasn't just some casual purchase to add to the portfolio. This deal was the trigger. It set off a chain reaction that would completely redefine the company's entire identity for years to come. Okay, this slide right here, this is the whole story in a nutshell. Before, Radian was a U.S. mortgage insurer. Its world pretty much revolved around the American housing market. But after buying Inigo, its ambition just exploded. The new goal? To become a global specialty insurer, a diversified worldwide company. And in that massive new vision, a U.S.-focused mortgage conduit just didn't really fit anymore. And believe me, this wasn't a snap decision they made overnight. The company's official statement makes it really clear. They actually tried to sell the business first. But after taking a good, hard look at everything, they decided, you know what? A clean shutdown is the best way forward for the new, leaner, more globally focused Radian.
Okay, so the conduit is officially winding down. Got it. But wait a minute, didn't Radian put a couple of other businesses up for sale around the same time? What's going on with them?
This little table lays it all out perfectly. You can see the company drew a really clear line in the sand. While the mortgage conduit is winding down, the other two, title services and real estate services, are in a different boat. For them, Radian is still exploring strategic options, which is corporate speak for, hey, a sale is definitely still on the table. So, let's zoom in a little. What does this massive strategic shift actually look like in the real world? Let's talk about the numbers, the timeline, the money, and of course, the people involved. And they moved fast, seriously. The whole plan was announced in September 2025. Just a few months later, in Q4, they'd already gotten $62 million from these units. By early 2026, the conduit slammed the brakes on taking any new business. They were really hustling to meet that original deadline in the third quarter. Of course, we can't forget that this is more than just assets and deadlines. According to their official filings, there were around 300 employees supporting these business units. That number really helps put the human scale of a big corporate move like this into perspective. And here's the perspective from the very top. CEO Rick Thornberry didn't frame this as a failure, but as a win-win. The idea is that by selling or closing these units, you're giving them a chance to go find a new home where they can really grow. Meanwhile, Radian gets to simplify its operations and pour all of its energy into becoming that global insurance powerhouse.
And all of this leaves us with one last really interesting question. The conduit is gone, that's a done deal. But those two other business units are still in limbo. So as Radian continues this incredible transformation into a global player, you've just got to wonder, what piece of its old self is going to be next on the chopping block?